Hey, good evening, everybody. This is Kody Ashmore, Director of Weekly Options Strategies here at Simpler Trading. And this is your nightly free video. In tonight's video, I wanted to go ahead and cover my evaluation of the SPY. So we finally got above 10 million late buy prints in the SPY. And if you're not familiar with my trading style, I match technical analysis in with order flow through any sort of volume, dark pools, real-time prints, it doesn't matter. All of its volume and all still paints a picture. But for a quick evaluation of the SPY, it has been in, actually, let me go ahead and fix this real quick. All right, so this is the weekly chart of the SPY. And what I've been looking for is for this weekly head and shoulders formation to play out, which we got. And here's the neckline. We finally broke below it on above average volume last week, right? So now this paints a picture to, theoretically, we should have more downside. And with that in mind, here is what I am watching. So here is the day chart. And let's go ahead and pull up all the late prints. Here we go. So this chart is where I map out all the late buy and sell prints. If it is dotted in green, that means greater than 15 million. But if it is solid, if it's green, it means we closed above them. If it's red, we closed below them. If it's dotted, it means greater than 15 million. If it's solid, it means it's greater than 10 million. So you get an idea of what we're looking at here. So here's the head. We came up. We hit this 10 million late sell print and then flushed down. Got another, actually there was another 10 million print right there. We flushed down. We have another 10 million plus print until finally yesterday, where we got 15.8 million at 412.07. So what does that mean? For right now, that paints the picture of basically a short-term bounce. If I see another day of heavy buying come in, then I'll consider that we could go higher, potentially up to 440. But at the moment, today, there was actually only 4 million prints. I'll bring up my other one. So yeah, today there's only 4 million prints at 414.40 cents. So, but from a technical standpoint, we flushed down to support, closed on a hammer candle on above average volume, and today we confirmed higher. So therefore, that is confirmation for at least a rally to resistance. So at this point, what I am looking for is for this to hold. Obviously it did. We got confirmation higher. I want to see a test of this grayed out area, which is about 430. That's going to be the next level of resistance. I would like to see it rally up to here, hit this zone, fail, and come back lower. That's the setup I'm looking for heading into the end of the week. But granted, tomorrow the FOMC is talking, the Fed's talking, so that could completely come in and shake the tree and change this whole outlook if they say something that is not currently priced in. So please keep that in mind. But yeah, that's my outlook on the SPY right now. Looking for a bounce up to about 430 and get rejected based off of the late buy prints that occurred on Monday. But I do want to leave all of you with the one little trade idea to consider, since you did take the time to go ahead and watch this video. Something considering to take long is potentially doing maybe a 10-day out of the money butterfly for a reversion to the mean. So you could do actually a 420, 430, 440 butterfly, do potentially about 10 days out. And if we're going to go ahead and look at that, actually that's it right there. Nope, that's not it. It's not it either. Actually, let's go ahead and price it out right now. So, like I said, it'll go about 10 days out. We're on target the 21 EMA or resistance. So it can go out to 430. You sell 2 of them. Buy the 420 and 440. And at this moment, you can get it for, we'll just say 215. So if you're going to get it for, we'll say one contract, it's going to cost you $215. So if With those buy prints in mind, we are expecting price to go higher for at least a short term and test resistance. So if you're looking at the risk graph, you can risk $215 to make about $7.85. So if you want to see a complete risk graph analysis, if you look down here as I move my mouse across, so you can risk $215, see as it says right there, lose $215. But if it moves up to 430, you can make about 780-ish. That's if it was to close there at expiration. That more than likely won't happen, but nonetheless, you can make about 100, 200, possibly even 300% return on your trade. If that is right, it's low cost, and it is something that could happen. And so once again, the whole trade setup is the late buy prints that have occurred at the bottom of a reversal candle, which is the hammer candle, and then we got confirmation today. And like I said, the FOMC tomorrow can completely change this narrative, but at the same time, from a technical standpoint, a rally up to this zone seems very possible if nothing changes. So that's what I have for you. Thank you very much for checking out this video. If you have any questions on the way I do things, feel free to check me out in Simpler Trading's free trading room. I'm in there live Monday, Wednesday, and Friday from 9:30 Central to 10. Thank you very much, everybody, and have an awesome day. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me